Guys, welcome on in all. This is Pavan, professional trainer and trader from the Trading Minds. So today I'm going to talk about an important topic, that is supply and demand zone. Yes, a supply zone and a demand zone is very important when you start about understanding the structure of the market and start trading. To understand what are the different kind of zones available in the market, how to trade the zones. Usually the supply and demand zone is traded by big institution players, big banks, and others who are big traders. So they create these zones where they try to enter and they try to exit. If you're able to catch these supply and demand zones, you have a greater probability of winning in the markets. Yes, there are various strategies in the market, right? Some people use price action techniques, some people use technical indicators, some of the people use something called as supply and demand zones. Usually supply and demand zones are used by big institutional traders or banks or asset managers. Those are the people know the exact area, exact zone where the price is coming, where there is a lot of supply and demand, where there is supply to enter, where there is demand to enter. So these are all the aspects you should be knowing to do a continuous and well trading in the stock markets. So if you know about this aspect is universal. The same technique or the same strategy can be applied across Indian market, across global market, across any of the instrument. For example, you can apply to cryptocurrency. For example, you can apply to Bank Nifty, you can apply to Nifty, you can apply to any of the stocks. You can even apply to Forex or anything and everything you want to trade. So, so to start with, so this is the topic for today, that is supply and demand zone. Let's start it today. Firstly, what is this supply zone and demand zone? The first majorly you need to understand that the supply zone and demand zone are the two laws that control all the marketplaces. These are the zones where entire marketplace is controlled, right? For example, I go to a vegetable market, I go to a grocery market. How the market runs? Basically, it is a supply and the demand, right? How the much there is a supply, how much there is a demand, right? If there is demand is more, the if the demand is more, then the price of the vegetable goes up, or the price of oil and gas goes up, right? If the petrol demand is more, but petrol is adequate, then the price of the petrol goes up. Similarly, if the price of onion goes up, why? Because when there is high demand, but there is no source, right? When there is no supply for it. So when the demand is more, that indicates that there are more people want to buy it. Similarly, when supply is more means what? Means there is adequate supply, there's a huge amount of supply is available. A vegetable is coming in huge number, but nobody is there to buy it. Then what happens? Then what happens is the prices of the vegetable comes down. Similarly, in stock market also, these are the areas. Demand zone is an area where there is interest of buying is more. Supply zone is an area where the demand of selling is more. Let's talk about this in detail. First thing I told you that supply and demand zones laws control all the marketplaces. Second thing, most traders depend upon technical indicators to identify the imbalances, right? I told you there are many traders who trade in stock market. They use candlestick patterns. Some of the people will use indicators. Some of the people may use price action methodologies. And this is one of the methods which I'm talking about today is supply and demand zone trading, right? Banks and other institutions create these zones. Who are the people who create these zones? There has to be a significant amount of buying. There has to be a significant amount of selling. Huge volume. What do you mean by volume? The volume is the number, the quantity, right? It has to be a huge number of buying or a huge number of selling, and that zone is very important. So that zone is called as what? Supply zone and demand zone. Smart money follows the zones. You can see it here clearly that the fourth point I mentioned is smart money. So we should always try to follow the smart money. Usually retail traders fail to do following the smart money, right? Most of the times you do something and never follow the smart money. You will think market will go up and they take a U-turn and market will fall down. You will think market will fall down now and they take a U-turn and take the market up. So if you know the demand zone and supply zone properly, the way I'm going to teach you today, you will understand how the market works and how you can identify clearly that where I have a maximum interest of buying, where there is a maximum interest of selling, which is the area I should concentrate more. Why I should wait for the price to come to my demand zone. to buy, why I should wait for price to go to my supply zone to sell. So all these aspects we are going to learn today. So are you learning something? Do you think you are learning something? Put in the comments in the chat box so that I know that yes, there is something you're learning today. Later at the end of the session, do note that to put a comment in the chat box or any questions related to that so that I always come back and answer to your questions. Let's move ahead. So what is supply zone, right? I'm not just talking about a theory today. I also explain practically also where to take an entry, where to place the stop loss, what are the targets we are looking for. All these aspects we'll talk about. So first thing is the supply zone. Like I already said, supply zone is an area where the traders usually sell. Supply zone is an area at the top, means the price is running below, at the top where most of the people want to sell. So that area is called as supply zone. Supply zone means what? There is lot amount of supplies there. Means many people want to sell there. Nobody want to buy there. They want to sell. So that is an area. The area present above the current price. It is above the current price. Means the price is trading here. Supply zone is above the current price where the maximum selling is coming place. So most of the times you would have seen that market is going up, kept on going up. At some point of time, it halts and takes a U-turns and fall down. And that area we call it as a supply zone. So usually it is present above the price. If current price is here, usually above the price there is a supply zone. We need to identify this zone. So today I'm going to show you how to identify these zones, how to mark the zones, and how to plan our trades. Then when the price hits this level, which is called as a supply zone, the unfilled orders gets completed. So most of the people who are kept it for selling, right? The big banks, the big assets fund managers, the institutional traders who have kept it for selling at that area will get executed and the stock will fall down because lot of supply is there, lot of selling is there at that level. So that it is called as what? Supply zone. So let me show you with a clear example here. See, I'm showing an example here. Before the example, let me also talk about demand zone. So what is demand zone? Demand zone is a place where there is more demand for buying. Simple, right? Demand means where there is more demand. Supply means where there is more supply. So demand zone is an area where the traders usually buy. Right? The traders usually want to buy that area. Most of the people will be waiting to buy at that area. Asset fund managers, right? Banks, institutional traders, most of the professional traders who know about market, who want to buy in the big money, who are smart traders, who want to put their smart money to be waiting to buy at their demand zone. They will not just open the market today, just log into the account and start trading. Guys, luck can work one day, but luck will not work every day. You need to have to come up with a process. You need to follow a strategy, systematic plan. When do I buy? When do I sell? What is my stop loss? What is my target? I need to define a process. When the price comes to my supply zone, when the price comes to my demand zone, only then I'm going to take an entry. That much confidence you should have. That much control you should have. Then you should maintain all the journal of your trades. Where I am buying, why I am buying, what is my stop loss, what is my target. Everything you should be knowing. Any criteria you use, any strategy you use, you will have the edge if the strategy is working most of the times. You should finalize to a strategy, and this strategy works wonderfully. I am teaching you today to utilize this strategy so that you can also use it and apply it in the real-time markets. And see, firstly, you do the back testing of the strategy. You do the back testing. You check for past 1 week, 1 month, 1 year. Any stock, we choose 5 stocks, or any index we choose, and then start doing it. Guys, until and unless you put some efforts, you don't see the rewards coming for you. You need to start putting some efforts here. Should not always go behind calls, tips, and all. You should always work on being independent, not being dependent. So coming back to the demand zone, what is demand zone? Demand zone is a place, area where most of the people want to buy, most of the buyers want to buy. Means there is a huge demand. Means from that level, the price is going to go up. Means if the stock is coming down and down and down, and there is an area where most of the people want to buy, there's a demand, that is called as demand zone. And the price will go back from that zone. So this area is present below the current price, right? If a market is trading here, if the stock is trading here, if the index is trading here, the demand zone is below. We need to wait for stock to come to that demand zone, and then take an entry. So which means that demand zone is has many buyers due to the buying orders. Like most of the people who are big traders, asset fund managers, banks would have punched their orders. They will be waiting to punch their orders and their orders to be filled so that the stock or index will come down to that area and then take an entry so that then it further goes up. So are you getting my point? There are two types of zones which I'm talking about. One is supply zone and one is demand zone. Supply zone is an area where maximum sellers will be waiting to sell. Demand zone is an area where maximum people wants to buy. So if I ask you a question, what is supply zone and what is demand zone? You should be able to comment in the chat box, right? You should be able to comment in the chat box below. Go to the comment section and type if you're following my channel so that you are understanding. I will know that yes, you are understanding what I'm talking about. Then you also note one more answer which I'm asking you a question here is, what is the area where maximum people want to buy? I'm giving you just 10-second break here. What is the zone where the maximum people want to buy? Just give it a, just think yourself. Yes, the answer is demand zone. Yes, demand zone is an area where maximum people want to buy, right? So this is how you need to practice. This is how you need to understand each concept. Now let's see examples, right? I'm not just here to talk about theory. I also show you some of the practical aspects, theoretical aspects, so that you will understand. Yes, this is how the market has moved. This is how you need to draw the demand zone and supply zone. This is how I need to take an entry. This is how I need to place a stop loss. This is what I'm looking for a target. Okay, let's move on. Supply zone. This is an example for supply zone. See, the supply zone is an area which I'm showing here. If you can see here, every time the price goes to the supply zone, it falls down. Every time the price goes to the supply zone, it falls down. Every time the price goes to supply zone, falls down. Again goes up, falls down. Again goes up, falls down. So this is an area where maximum supply is available. Means maximum selling is kept. Lot of orders are punched in here that I want to sell this. Most of the orders are getting filled here. Whenever its price is going above, orders get filled and will get sold. Again goes up, order gets filled, gets sold. Again goes up, order gets filled, gets sold. Means sell orders are sitting here. So this is called as supply zone. We should mark our supply zones like this and look for selling at these areas, selling at these areas, selling at these areas. So you may have a question, sir, how do I understand that this is a supply zone? It is very easy to understand. You should always try to understand that when the price takes in halt, usually it is above the price. See, the price is below, it is trying to go up, and suddenly price takes in halt. It starts making small candles, or it starts making a long wick. What is wick? You can see the candle, big lines here. This is called as wick. It starts making a wick, or it halts for a while. See, it halted here for a while. 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 If it's starting to halt at some place at the top and it is slowly sliding down, then that area is called as a supply zone. Supply zone is an area where you can start seeing big red candles or long wicks here. Suddenly I see a big red candles here. At this place here, big red candle. Again here, long wick, long wick, long wick. Wick means the small line means rejection. There is a rejection that price is not able to move above this area. So this is called as what? Supply zone. Clear? So next, let me talk about demand zone. So demand zone means what? It is below the price. Stock is trading above. The supply zone is below the price, where every time the stock falls down, there is buying coming in, buying interest coming in, buying orders are punched in, so that the price will again go up. So this area here is called as demand zone. If you see here, every time price comes to this area, it bounces back. Comes to this area, orders get filled and it goes up. Again comes back to this area, order fills up and goes back. Again comes back to this area, order fills and goes up. Again comes back to this area, order fills and goes up. And if you notice what I talked about earlier, there will be rejection with a wick. See here, there's a long wick here, long wick, long wick, long lines here. You see long lines? It shows that there's a buying. Means selling are coming, selling is coming, but buyers are more. More institutional buying is happening, or more people want to buy. There's a lot of interest in buying, and price shoots again back. So if at all you want to plan a trade, how you have to plan a trade? You should keep a buy order at the demand zone. You should keep a buy order at the demand zone. and you should keep a sell order at the supply zone, right? Or if you want to buy a call option, you have to buy at a demand zone, and if you want to buy a put option, you have to buy at a supply zone, correct? So where should be my stop loss? For example, I'm taking an entry here below the demand zone. You should keep your stop loss. Below the demand zone should be your stop loss. Similarly, if I go back here around the supply zone, if I buy a put option here, or if I short a stop, my stop loss should be at the top of the supply zone, right? The zone is very big. Usually the zone has a little bit of buffer so that you can always keep a stop loss above the buffer, right? At the top of the bottom of the demand zone. And what should be my target? Minimum look for 1:2 target. 1:2 means what? If I'm taking 10-point risk, for example, from here to here, I'm buying here, I'm placing a stop loss here, means 10-point risk. You should look for a target for 20 points. You should look for a target for 20 points. At least 1:2 or at least 1:1. At least 1:1, which is 10-point risk, 10-point target. You should look for 10:2 also, 1:2 also. 1:3 also will work because supply zone and demand zone work very effectively. Because we are not taking on a smaller time frames, we are looking at a very big time frame like 1 hour, 15-minute time frame, and then drawing the levels and then taking a trade. So this is a subject matter expert matter, right? This is works a market structure. If you know about market structure, if you can follow the smart money, supply zone and demand zone works wonderfully. Yes, the entry and exit are not numerous. You will get very less entries, you will get very less exits, but you will get quality entries. Who wants quantity when you have a quality, right? Follow the quality rather than quantity. Quantity is for the people who likes to scalp. So for scalping, there is a different methodology to follow. Today I'm talking about what? Supply zone and demand zone, which is a quality trading. Picking the stock at the right base, picking the stock at the right top for the reversal so that it will fall, for the reversal so that it will go up. Exact demand zone and exact supply zone. If you start marking, if you start practicing for the next three days, 5 days, 1 month, you will get confident. And then market, see in the live market, and then you can always analyze and backtest and see, yes, my strategy is working, right? So let's see how it worked today in Nifty, right? I'm taking a live example of Nifty trade today. Let's take a live example of Nifty trade today. If you see here, if you see here, the price started going up and started coming down, and it took a support at this area where there is a lot of buying interest. So I mark this zone as a supply zone. This is happened on day before. Means on Thursday. This happened on Thursday. And the next day the market gapped up and the market went up, and further came down. And today also it came down exactly at the same level. Again, I always kept on saying to you that, see, there will be a rejection, there will be a long wick formation. See, there's a long wick formation in this area. And see here, there's a long wick formation at this area. And this is a level where it is rejected previously. Rejected previously means there is a halt in the fall. It was continuously falling down and falling down and falling down, and there is a halt here because more buying is coming in. Most of the people want to buy there. Lot of orders are filled there, so that the and I also said that the bullish candle will get formed at those areas. Bullish candle will get formed, and a long wick will get formed, and that area will mark it as what? Demand zone, right? So this is a demand zone trade here. I got a trade at a demand zone and I had marked it here. The next available time. See, today's market. At today's market, when I'm trading today, I need to see the left of the chart. Means from the past 1 week, 15 days chart, and then I have to try to draw the supply zone and demand zone. Supply zone will come at the top, demand zone will come at the bottom. So today, since market was falling since yesterday, from Friday, today it came to the what? Demand zone. It came exactly to the demand zone, and it reversed from the demand zone. And if you see, the risk I'm going to take is at the demand zone, I'm taking entry here, and stop loss will be below the demand zone, right? Maximum there is 150 to 100 point risk, but the target is 200, right? 1:2, 1:3 profit has come in today's trade itself. And I will show you the live trade as well. The same trades has been taken, so that I can explain you the same topic with the proper entry and proper exit as well, right? So let me go to the chart now. Let me open the chart for you and let's try to draw this supply and demand zone and let's identify the supply and demand zones, and then let's understand when to take an entry and let's also understand when to take an exit. So do you want to try it practically? Then follow this. Then follow this methodology. Let me open the trading view terminal. Let me open a trading view terminal for you. Hey guys, so here now I have opened my trading view terminal. So trading view terminal, I use it for my technical analysis so that it is very easy and lot many tools are available. You can see on the left side, I can see lot many tools available. So I'm going to use some of the tools here to do my analysis. So what I'm going to draw here now is I'm going to draw the supply zone and demand zone. So what is the time frame we are going to use? The minimum time frame we have to use is 15 minutes and the maximum time frame can be 1 day or 1 hour. So whichever is convenient for you. So let me go with 1 hour first. So I'm using a 1 hour chart here and I have opened NIFTY. So most of the people would know that what is NIFTY? NIFTY is the index of Indian stock market where top 50 Indian stocks are available. So index is called as a barometer of the stock. If index is going up, we know that the market is going up, right? So there should be something called as barometer to understand what is our market doing today. So likewise, if most of you are fascinated about trading in index or trading about in any of the stocks, supply and demand zone will work. So I'm going to explain you with an example today with the NIFTY. With the NIFTY, I'm going to explain today. So I'm taking a 1 hour chart here. If you see here, I'm taking a 1 hour chart here. So most of the people can trade on different aspects, guys. Like I always told you, see, if I take a trend line here and if I draw a line like this, I can also trade like this, right? This is a trend line trade, right? The market can come here. The market can come to the trend line, again go up, again come back to the trend line, again can go up. So this is one of the methodologies. Similarly, some of the people will trade with respect to some of the indicators. Some of the people would like to trade with other methodologies like price action. So today I'm going to explain about what? Supply zone and demand zone. Right? Supply zone is an area where maximum selling is there. Demand zone is an area where maximum buying is there. Simple. So let's try to understand this chart. I'm taking a 1 hour chart here. Taking a 1 hour chart here. Now, so for example, if I'm trading today, let's say today is the day I'm trading. When I'm trading today, I need to see at the left of my chart, left of today. So this is the today's candles. So today is this chart. Then I need to see the left of the chart. So what are the supply and demand zones available? So if I go here and draw, so I can take a rectangle box here. Can you see here? If I go to the left of the trading view, I can take a rectangle box here, one of the shape, and I can draw a zone. What is a zone? Like I said, when market is coming down like this, but there's a bounce coming from this area where buying is coming. So this area, multiple times, rejection is happening here and market is going up. Multiple times market is coming here but not able to break this level. So that is the demand here. This zone has a demand. Since the market is falling every time it is going up. Falling every time it is going up. So I call this area as demand zone. This is called as demand zone. The maximum big smart money want to buy. Right? So what I will do? I will take a rectangle box here and draw this demand zone like this. See, draw this demand zone like this. I've drawn a demand zone like this. I'm touching these candles. I'm touching these candles, majorly the wick format. Majorly the wick format, right? Usually it will be points, 30 points, 50 points. Similarly, if I go back in the chart previously, I go back a little bit, you can see here, I can draw one more. Can you tell me where it is? See here, again, if I go and draw here, market was coming down, went up from this. Again, coming down, went up from this part. Again, coming down, went up from this part. So this area, there is a supply coming in. There is a demand coming in. There is a demand coming in. So this zone is called as what? Demand zone. There is a demand. So I draw here again, I take a rectangle here, and if I draw here, this is my demand zone. This is my demand zone where maximum buying is coming in. Similarly, if I draw the supply zone where maximum selling is coming. See here, whenever I know it is very difficult for initially to understand this, but do not, no problem. If you have any issues, any concerns, put in the comment box with a screenshot of what you're trying to draw so that I can confirm that yes, whatever it drawn is right or not, right? See here, market is trying to go up, but again from this level falling down. Again trying to go up, but from this level falling down. Again trying to go up, but from this level falling down. Again trying to go up from this level, but it halted at this level. So what? What you're understanding, and I also told it, you will get a long wick here, halt and long weekend halts, right? So this area is called as supply zone. So if I draw a rectangular box here, this area where maximum selling is coming in, means people want to sell from this area. So I'll mark it in red color because selling is red, right? I mark it in red color. I mark it in red color, this one, so that you'll understand this is a what zone? This is a supply zone. This is a supply zone. So if I also elaborate here so that next time the same levels, the next day, sometimes when it comes to same levels, we can always work with it. We can work with it. So I'll also type for you. I'll type for you. So let me go to the section here, text content, and I type here. This is what? Supply zone, right? Supply zone. This is my supply zone. You should always look for selling at the supply zone, not buying. This is my supply zone. This is my supply zone. Similarly, this is my demand zone. At the demand zone, you always what you have to do? You should look for buying, right? Correct. So you should always look for buying at the demand zone. Similarly, here again, if I see here, I see one more market is falling down and this area is getting a supply. Demand, right? There's a demand here. So I go here and draw here demand zone. And I type my demand zone. So this is the demand zone. This is the demand zone which I marked already. So hope you're understanding how I marked the demand and supply zone. If I go back previously also, you can again draw. See, again, market has fallen from this area, from these areas. So this is my supply zone. Yes, correct, perfect. So again, market is reversed from this area. This is my what kind of area? Demand zone. Yes, correct. So I mark it in green color. So this is how you start marking and getting those levels. Start marking and understanding these levels, and market usually trades between these levels. Once supply zone is broken, it will act as a great demand zone. So the market can go up, right? So now I come back to today's trading. For trading, what is the time frame to use? So for trading, we should use 15-minute time frame. For intraday trading, you can use 5-minute time frame or 15-minute time frame. I am showing today in 15-minute time frame. So I'm choosing a 15-minute time frame today. And if you see the charts today, exactly at this point yesterday, exactly at this point on Thursday, market had bounced. And similarly, we again touched our what zone? This is demand zone, right? This is the demand zone which I'm talking about today. Exactly the demand zone. If you see here, there's a beautiful reversal candle formation. So if you, some of the people who know reversal candlestick pattern, this is a candlestick pattern called as hammer candlestick pattern, which signifies that I am not going to go down, but I am going to go up from this. I'm rejecting to go down. A lot of buying order is coming here. So what you have to do? You can buy your entry here. Why? Because this is a demand zone. This is a demand zone. There is a demand here. So what I'm trying to do here is I'm taking a buy entry here, at least in this candle or this candle, whichever candle. So actually I took an entry at 10:45. So let me mark it here. So entry. So I'm entering here. Entry. So I'm entering here. I'm taking an entry here. Okay. Hope you understand why I'm taking an entry. Why? because demand zone is there below. I can buy it here, or I can confidently wait and see that whether market is staying above that area, and if it's staying above that area, I can take an entry. Then I need to place my stop loss, right? Where is my stop loss? I said this is the demand zone, low of my zone. This will be my stop loss. So this is my stop loss. Stop loss means what? Stop loss means what, guys? Most of the people, if you know about market already, you'll understand. But if you are very new, stop loss is a point where I am going to exit my trade. Means this is an area where my minimum losses are controlled. Means at this point of time, if market comes below this area, if Nifty comes below this area, I am going to exit because I will not take more risk than this. Like I always say, trade with risk management. 1,000 rupees risk, 1,000 rupees reward. 1,000 rupees risk, 2,000, 3,000 reward. 100 rupees risk, 200, 300 reward. But for this trade in a Nifty trade, right? Nifty trade, I'm going to take an entry here. Nifty trade, I'm going to take an entry here at this point of time. And from this point, let's understand what is the stop loss and what is the target. So there is an option here called as long position. So I go to the left of the panel and I choose long position. I click here and you can drag till the stop loss. So you can set the stop loss. If you are very new to trading, you will start, when you start using it, you will try to understand more things. Here, I am configuring my stop loss here. What is my stop loss? See, almost 48 points is my stop loss, right? See here, you can see 48 points is a stop loss or 0.29% is my stop loss. Let's see what is my target. Target, like I said, at least 1:2. Let's take 1:2. That's more than enough. 1:3 also has come. Target 1:3 also has come, but that's not. We don't need bigger targets. Let's go with 1:2. So this is my target level. So you can see 1:2 means what? Here it is showing, you see, profit and loss will be 88 points. If I'm taking a trade here with 48 points and risk of how much? 0.29%, my reward should be double of that. So this is my target where my tool, there's a tool here called long position. You can use the tool and set it automatically. So this is my target. I'm dragging it like this. So this is my target. Did the target come or not? Did the target come or not? So if I type here, so this is my target. What is the target? 1:2 means what? 100 rupees risk, 200 rupees reward. 1,000 rupees risk, 1,000 rupees reward. Let me make it green. So this is the reward we are looking for. And if you see, exactly market has come to this area, taken a reversal, and then went up and hit our target here and exited it. So this is the level of trading ideology you should follow. I'm taking a risk, I'm taking an entry here, taking a stop loss here, taking a target here. And I'm following this risk and reward methodology. 1:2 risk to reward methodology. And I'm waiting for my entry. I didn't just start my trading with when market just started at 9:50. I just didn't start trading. I waited, and I waited till I get an entry here. Till I get an entry here near my demand zone. Once at the demand zone, I find a reversal. Beautiful hammer is formed. Means what? There is a reversal from this area. I can take a trade. So I take an entry here. I place a stop loss below the demand zone. And then I look for 1:2 target. So if any of you have questions, sir, okay, I understand Nifty we have to trade. If Nifty I am taking, then what is the option I am have to take? Simple option I'm telling you, I'm giving you a very easy thing to understand. Let's not go into detail of what is delta, sir, what is gamma, what is vega. I'm giving a simple answer here. So if you see here, at this point of time, what is the price? What is the price at this point of time when I'm taking a trade? It's exactly 16,500. See, exactly it's 16,480 something. So you can buy in the money option or at the money option. Means 16,400 or 16,450 or 16,500 call option. If market is trying to go up, we need to buy call option, right? So I'm going to take a call option at this point of time. At this point of time, exactly. Let me show you my Zerodha terminal. How I took a trade here. See, this is the Zerodha terminal which I'm trying to show you here. So if you see exactly at 10:45, I'm refreshing this page. I'm reloading this page so that the latest data will be shown to you. So this is the point of entry at a 10:45. I'm taking an entry. See 50 quantities for this showing purpose, for this technique, for this demand zone trade. I'm taking entry at 283.65. Right? If I open Nifty 16,400 call, Nifty 16,400 CE of 9/16th April. I'm taking a trade for next week option rather than this week option. So if you see the chart here, 15 minutes chart, 15 minutes chart, if I go here, I have taken an entry at this point, right? At the same point where I've got an entry here, same point. What is the time? 10:45, right? At exactly 10:45, I'm going to take an entry here. Here, 10:45, this candle. 283, I'm taking entry. A stop loss will be low of this candle, almost 260 will be my stop loss. 260 will be my stop loss. And I'm looking for a target of 1:2 somewhere here. So if you go to my order book and see at exactly 1322, 122, I have executed at 328. So if I come back to this, 122 means exactly at this level, exactly at this area, my target of 1:2 has achieved and I have booked my profits. So what are the profits I'm looking for here? I look for 1,000 rupees risk and look for 2,000 rupees target. Right? I look for 1,000 rupees risk. Like I said, 180 rupees I am buying. If you see here, I am buying here at 180 rupees and I'm keeping a stop loss below here at 280 rupees. I'm keeping a stop loss at 260 rupees, which my risk is 1,000 rupees. 20-point risk, 50 quantities, 1,000 rupees. And I'm looking for 2,000 rupees profit. And if you see the positions, yes, exactly, we have made more than 2,000 rupees profit. Hope you are trying to understand here. Hope my logic is fairly understandable here. So buy, always look to buy at the where? At the demand zone, and always look to sell at the supply zone, and always follow risk to reward methodology. I also showed you how to take an entry. I also showed you how to place a stop loss, and also showed you what is a stop loss. Means 20-point risk, right? And 40-point target or 50-point target. 1:2 is the target which we are looking for, and these are previously, if you go and see also, it has achieved. If you take an entry here, you go up. Again, if there is a supply zone here. See, any of you are planning to take a reversal here, right? See here, there is a market is falling from this area. Right? If you mark here, since it is a supply zone, I have to mark it in which color? To mark it in red color, right? See, from this area again it has fallen. So again, there was an entry at this point. There was an entry at this point to short. Okay, this point you missed it, no problem. At least second time you had an option here to go for a short here and then take a 1:2 wins. That's it. Again, you got a buy opportunity here, then you got a trade. When you trade with supply zone and demand zone, right, you will not trade all these trades in between. I will not get into trading in between anywhere. I always wait for my opportunity at demand zone or supply zone. So there is no in between entries. So that is why one of this technique is wonderful and very easy to follow as well. And if you follow this methodology, you can always try and trade. Also, some of the people will have this doubt, sir, premium will decay, market becomes sideways, premium may decay. Premium may decay. That is why you can always try to choose the next week options, which is pretty safer. And the price will not move very fast down or very fast up. So it will move gradually according to the market movement, right? If market is near to the expiry, the current week option may vary too much or the premium may decrease. That's why I showed you an example. I traded the next week option so that the risk is low. Target also is 1:2. Target also is 1:2. Risk is also 1:1, right? 1,000 rupees risk I took, 2,000 rupees I traded. So in the money and current week option will be slightly varying a lot, and sometimes your stop loss also may hit very soon, right? Because of the deviations in the market, sudden selling, sudden buying. So to avoid that, I just showed you we demanded supply zone. Anyways, you need to sit in the trade. You can even sit for more than one day, but I usually suggest you trade intraday Because when market suddenly opens tomorrow, we never know, we never have control where the market is going to open and where the market is going to drop, right? That is why I always suggest you mark the supply and demand zone, but trade intraday. Positionally also you can trade, but there is a risk involved with it. You need to understand the risk, right? So that is why I always suggest to trade supply and demand zone. So if I just try to reconfirm what all things we learned today. One is what is supply zone, what is demand zone. Supply zone is an area where maximum sellers are there. Demand zone is an area where maximum buyers are there. We should always look to buy at demand zone. We should always look to sell at supply zone. Demand zone where big traders, institutional traders will try to buy. Supply zone is where maximum people, institutional traders, banks will try to sell. So those are the areas we should be interested, so that we also buy in the smart money. Let's think to be smart today, right? Let's try to be smart and try to take those entries and do smart trades and quality trades. It is not about quantity here, it's all about quality. So I hope you understand today, and also took an example of one of the NIFTY trade today. NIFTY, how I mark the zones, how I took an entry, what is the option I took an entry, what is the target I look for, what is the risk to reward I showed. So every aspect I have tried to show you today. Hope this is very clear and comprehensive as well. In case of any doubts, in case of any clarifications or more learning, you can always email us at getinfo@tradingminds.com. Right? You can always learn from us, learn more from us. I am very much passionate about learning, mentoring people, and also giving a lot of guidance who are very passionate. Right? And also, I will try to create more and more videos, more and more learning aspects, so that you can always try to follow. Do subscribe to the channel. Do subscribe to the bell icon. Click the bell icon and subscribe. Tell to your family and friends as well if you are learning. If you feel that there is honesty here, there is something you're learning here, then do inform your family and friends. Hit the bell icon and subscribe to our channel, so that more and more learning videos I can prepare for you, so that you can go through and learn, because market is an ocean and we have just started, right? There's a lot to learn from this Smart Mind series, where I'll be doing lots and lots of knowledge sharings for you to learn from my past 12 to 14 years of experience. And if you like it, please do hit a subscribe button. So if any other queries, do contact us. Do try to comment us how you felt about today's session, the topic of supply and demand zones. If it was very adequate for you, did you learn something? And if it's very good or bad or any feedback is okay, we're open to take it. Hit a like icon, hit whatever comment you want to put it, and do share and subscribe and learn from us more. See you again soon.